Hey guys and gals, sorry I was running just about a minute late. Hope everybody's having a great trading session. I wanted to give actually an extra minute for people to attend that might have forgot that it was at this time versus last week, because in the European, we did time change this week. Europe does it in 3 weeks, so for that reason, I just wanted to give like an extra minute. So let's talk a little bit about the S&P and where we're at. There was a pretty key development that happened about 15 minutes ago. If you weren't watching, or maybe you missed it, you weren't in our chat room. This buying that you saw in the S&P right here, right? You notice how we were trying to break the, this is the halt area. We were trying to break that halt area above that, and we were kind of rolling over, kind of failing above here. You can see those long wicks. Do you know what told me that the S&P was going to roll over here? Now, I don't know where we're going to go the remainder of the day, but this little failure here was really a result of, well, I say result of, but one of the things that clued me in is the dollar yen failing at this this little intraday trend line. It started trading really heavy in the 60s, and I'm like, hey guys, you got to watch the 102.60 level. It's really the dollar yen struggling there. Also, one of the things that I bought just a little while ago, I bought the US dollar Mexican peso at 82. I sold it at 86 or 88. Hold on. I sold it at, bought it at 82, sold it at 86.50. So made a couple hundred pips there. I obviously should have held it longer, but seeing that turn, seeing the dollar yen turn, that led me to believe that the S&P was probably going to roll back over again. And have you guys ever seen that that GIF in Star Wars? It's a trap. That one. That would be. Hold on. It's gonna be about 30 minutes. That one. That with General Akbar. It's a trap, right? That's all it was. It was a little bull trap right there, and so stocks kind of rolled over. I'm a little worried about equities, and let me tell you the reason why. And I alluded to it on Twitter, because let me start by saying there's three things that as a trader, like there's three things that I'm really like focused on mostly, like, for the most part. I look at equities, I look at currencies, and then I look at the bond market. Different ways to interpret the bond market depending on the yield and what end of the curve is moving, yada, yada, yada. But when you see stocks that are obviously being sold, you see the US dollar, which is obviously being sold here. Here's the euro, right? And I think you can probably argue that this is a bullish wedge, roughly, kind of peeking in and out of it, but it's a bullish wedge, which means that the euro is probably going to break higher, which means dollar lower. Dollar's moving lower. Equities are moving lower. What else is moving lower? What else do you guys think is moving lower? Well, what's starting to move lower right now, and I think is pretty important, is that you could argue the 10-year, 30-year, whatever. The bond market has reached some pretty big levels, and you guys know that sentiment was so uber bullish. It was aggressively bullish. I believe daily sentiment index was at 95 or 96 on Sunday. I have to go back and take a look, or on Friday rather. But this move lower in bonds is a little scary when you have a move lower in stocks, move lower in the dollar, and then you have a move lower in bonds that is starting to brew. What that explains to me is something that I think is, we need to hear what the market's telling us. I think a couple things. Let's start with the Trump administration. I really think that the Trump administration their lack of ability to respond or even acknowledge the coronavirus concerns is probably a big concern for the market in general. That's one of the reasons why, you're seeing the markets down. Yes, you could say, well, how about, OPEC? Yeah, that's part of it, which is going to really impact like shale. But based on who we talk to in our office, which is a lot of institutional clients, trade desks, people around the globe, one of the big overarching themes is, well, what is the Trump administration doing? So I think that's one issue. Another issue is the Fed. Everybody's like, okay, well, what's the Fed going to do? Oh, so they cut rates. They're going to cut rates again. They might do quantitative easing 4, but what's that going to do for, potentially the collapse near term, or maybe in the intermediate term, of global GDP? Probably nothing. So when you lose confidence in the Fed and quite possibly the administration, now you're starting to see selling come in every US asset that we have. And that is a scary, toxic mix. I don't know if bonds are done going higher. I know that most of the institutional people that we've been talking to is like, I'm not paying that for US securities, Treasury security. I'm not paying it. So now it's a value proposition issue. So now you got bonds that are an issue, stocks that are an issue, the dollar that's definitely an issue. And that, like I said, is a very, very toxic mix for the market. So if you're sitting here looking at equities and you're like, dude, it's so cheap, I'm going to buy it here. I'll just tell you that my targets right now are about 2,500, roughly, in the S&P. 2,500, maybe even lower than that. I know you guys probably heard me this morning on the Face webinar, but really this 2,500 is going to be pretty key. I do think we're going there, whether it's today or tomorrow. Depending on how we close today, I think it's going to play with sentiment pretty aggressively. Obviously, if we close down at these levels or lower, you're going to see people hitting the bid tomorrow. Then that could set us up for maybe turnaround Tuesday type of thing. But I really wanted to point out the like I said, the toxicity of stocks going down, dollar going down, and quite possibly bonds might be going down. If yields start going positive on the day, we got a long way to go positive, but let's say bonds really come off today and the stock market really comes off and then the dollar continues to get pummeled, that's going to be an issue. U.S. State Department official says Trump administration will soon issue advisory warning anyone storing Iranian oil in violation of U.S. sanctions. Huh. Okay. We are looking at a possible fiscal package coming from the administration. But until, we have test results or testing done with, the coronavirus and ample tests, we understand what the numbers are, the market's still going to be freaked out. So I think you gotta sell rallies for any type of near-term response that you see in equities that might be a bullish response. I think you got to look for areas to be sellers until the market comes to grips with what we're dealing with the virus, whether you think it's a hoax or not, or it's real or not, or maybe it's just it's just a little bit more dangerous or different strain of the flu. Yeah, that doesn't matter because it's what the market believes, not what you believe. So just one of the things that I was making with a point with a friend of mine, we were discussing about, he's very bullish the market down here, and I'm like, but he's also he politically thinks about things too, and I try to be agnostic when it comes to that. I try to just look at the market in more of a wide lens and hear what other people are saying versus what I'm saying. What I feel, I would have been in a lot of trouble over the last couple of years if I just listened to what I felt politically, but I don't do that, not in the markets. And that's going to be really important moving forward, because you can be jaded with all the headlines, and depending on what news outlets you're watching, it's try to keep an open mind, and that's the best approach, in my opinion, when you're dealing with the markets. I'm not telling you some of these things because I feel like I need to. It's because these are things that I hear, not anything more than that. So you have to just know that when the market's feeling a certain way, you've got to be respectful of it. It doesn't matter what your feelings are. Okay. Couple last things I want to point out. Aussie dollar, we had this really, really big reversal from these lows. I actually bought the Aussie dollar last night and sold it. I scalped it long last night, way down here. I mean, way down at these levels when we were going in this like absolute free fall. And I made a few bucks. Actually, I'm surprised I actually made money in that, frankly, because I was buying this like elongated dip and I just scalped out of it really quick. But what was interesting, I was looking at the Aussie and I'm like, man, this thing looks strong when it was trading up in the 60s. But what we have to realize is this is previous support, current resistance, 50% of retracement of this whole move, even the spike low, 50% retracement. And that to me right here, looked like a bull trap. Everybody's like, ooh, crap, we're going to play along the long side. And then, here they are, getting liquidated. I'm not a big believer in the Aussie is going to be a rally currency, as stocks come down. I still believe the Aussie, there will be some downside. I'm not trading it right now. I didn't trade it on the short side up here. I just want you to be aware of that, if the Aussie's staying weak and it's not breaking higher, then I doubt equity markets are going to be able to get any type of move. One of the last things I should talk about is crude oil. This move in oil, I did buy crude last night, which I never do, very rarely. I bought it last night, went brushed my teeth, made a couple bucks, and I knew I should have held it overnight. I just wanted to be able to sleep, and I would have done a lot better if I just would have hung on to it. We are at 161% extension of our last range. So you see the last range. That's the reason why I was buying it. I bought it at 27. I want to say 27.60 because I put my stops below this 26.97. I put it like at 26.60. I walked away for 15 minutes brushing my teeth, getting ready for bed, and then it popped up like 50 cents, and then I sold it after that. But obviously I didn't make this $2, $3, $4 rally. The thing about crude oil is it is weak, and it's weak for a lot of reasons, not just the whole OPEC situation. Demand is going to be down quite a bit, and yes, OPEC members are increasing output. This is the way that the Middle East and Russia are going to try to push U.S. shale companies out of business, and I think it's frankly it's a pretty ingenious plan if they can stay afloat. You got to hand it to them. But the problem with that is I think it is going to keep crude oil relatively weak, and especially with the economic environment globally the way it is, you have to be careful about playing crude and saying, oh, this is the bottom here. I want to be long because I'm looking for 50 again. I don't think we're in the right economic environment to be expecting that. Probably, if I had to imagine, just kind of guessing what I think might happen here in crude, we're going to do something like this. We're going to have this little bear flag. We might actually hit new lows, and then that's probably going to be the place to buy it, is somewhere down here, depending on what's happening with the rest of the market. Obviously, if I had to guess what would happen with crude, it's going to be something like that. Now, I'm not trading it here. I don't think you have any edge at this point. It is oversold. I think that we get back down towards $27, and you gotta start keeping an eye on it, and keep a close view on it if you want to be trading it. Just watch price action. But guys and gals, hey, look, it's a very nasty market. Volatility is high. One of the best ways to navigate through that is be in the chat rooms with us. Come in the chat room. All you have to do is be a ForexAnalytix subscriber. It's only $1 for 10 days to try it out. But when you do that and you're logged in, download the mobile app. But hit this button right here. This button right here says go to chat room. It's next to your icon, your name. Go there, and that's where you're going to find me most of the day. So thank you guys for listening in. Have a good luck today. Remember, trade smart, trade smaller. Watch this volatility. It's really, really, really dangerous out there. you know, you can make money quickly, you can lose money quickly. So keep your position sizes smaller, and you know, cut your losses quick. If you see you're in a loss, just get out. Probably gonna, more times than not, you're gonna be happier that you got out. You know, a lot of times when you're in you know, range bound markets, you get out and you're like, man, if I would have just held on to it, I would have done all right. Yeah, but this is a different market. This is a trending market. So when you're in a trending market and you get stuck on the, you know, trading counter trend, and then the trend keeps working, and it's in the trend it was going, and it works against you, it could continue to go for a while. And the last thing you need to do is find yourself in some hot water because of that. All right, guys and gals, have a great one. I'll talk to you soon. Thanks for tuning in, everybody. And I'm sorry I didn't get to comments today. All right, have a great one.